Welcome to Mogobe Nuggets of Wisdom podcast. My name is Mompoloki Lerumo Mogobe. Our objective is to enthuse, inspire, energize, and empower entrepreneurs and entrepreneurs of all stripes here in BW and beyond. We do so by inviting these entrepreneurs and entrepreneurs into our makeshift studio. Sometimes we call them to the restaurant, sometimes we go to our studio, and we ask them to share their experiential knowledge, their experiences, and their expertise. And we ask them as many questions as we can, aimed at empowering you also as a viewer. Hello, dear viewer and listener. My name is Mompoloki Lerumo Mogobe. Once again, a wonderful guest. I'm welcoming you to another episode, Mogobe Nuggets of Wisdom podcast. Trying to enrich lives, to empower lives, trying to bring life-changing stuff. We're going to talk about all things finances. We're going to talk about, investment planning, and I'm sure you're going to love it. But before we start, as is customary, I'm going to ask you to strike that button, please. Please subscribe. We need your support, guys. Welcome to the studio, Mr. Tiroyaone.
Well, thank you so much, Mr. Mogobe. I feel very welcome. It's great to be here.
Okay. I'm privileged and honored as well. We normally kick off things off by sharing your background, your details, and what you do.
Sure, I'd be happy to do that. So my name is Tiroyaone. The full name is actually Tiroyaone Brian Howard.
Mm-hmm.
I do prefer to go by the shorter version, which is Tiro. Makes conversation a little easier. I'm the business development manager at Kgori Capital, right? But what I like to think of myself as is I'm a champion for planning for your future, and that's why I am. That's why the world of investing is something that I'm so passionate about. So I come from a financial planning background. I spent a good part of my early stages in my career doing financial planning. And like I said, now I'm with Kgori Capital, which is a homegrown asset management firm or investment management firm. And really what we're trying to do there is give Botswana and give Botswana the best value with their investments, with their financial investments.
Okay. Academics?
Thanks. So I did a bachelor's degree at University of Botswana. I hold an FMVA certificate, which is Financial Modeling, Valuations, and Analysis. More importantly, though, I'm working towards my Chartered Wealth Manager qualification. Right, being in the very last level of it, I just have to kick myself to get up and study, which is a UK qualification. I spent the bulk of my academic life outside of Kgori. I grew up in a small village called Tsabong. And that village is pretty much to blame or responsible for the man that I am today.
Wow, that's great. How did you gravitate towards finance, planning and finances?
Right. So that's a good question, actually. It's not one that I'm asked a lot. When I was young, I had an uncle of mine who used to work for another asset manager. And at the time, investments weren't so popular here. So I'd visit him at his place of work. He'd grab me sometimes from school just to come and see what they were doing there. And I think that had a very sort of strong influence in my future career choices. I probably would have been a lawyer or would have studied law. But
you have the look of it, of one.
No thanks. But I think just that, gravitated me a lot towards finance and towards investments. And then when I did eventually study finance, bachelor's in finance at the University of Botswana, I was part of the University of Botswana Finance Society. At some point, I was actually the president of the society.
Oh.
And at the time, I remember, we had a huge concern about investing and investments, it still wasn't as popular as the other fields of finance, such as banking and such as insurance. And I just thought that, listen, I still feel as strongly as I did about this when I was a little kid. And, I don't see any reason to back out. If anything, I feel more strongly about it, knowing that this is a field where a lot of development, a lot of sensitizing needs to happen.
Now, let's define the topic, investment planning. What are we talking about? Can you just explain it in simplistic terms for the benefit of the layman?
Right. So, investing, let's start there, is something that you do for a benefit in the future. And so you have to put some thought into it. What benefit are you looking to accrue in future? Or what liability are you trying to take care of in the future? What goal or objective are you trying to achieve in the future? How do you get there? How do you start now with what you have now? Right? So if you look at investing, it's not a spontaneous or a sporadic decision. There's a lot of elements that go into it, which we'll obviously discuss as the show goes on. And so what we're doing today is unpacking that journey from day one to the last day, if I'm to call it that, because investing is a lifelong journey.
And in terms of the Botswana situation, is it something that is catching on, investment planning?
Catching on, definitely. I say that because when I was in school, we used to say quite a lot that a lot of financial literacy needs to happen in Botswana, right? And at the time, you could almost count on one hand the efforts that were being done towards investment literacy and towards financial literacy. But nowadays, it's something that you hear about almost every day. There's a lot of people that have gone into the field. There's a lot of financial advisors that are, mushrooming. There's a lot of, maybe not a lot, but you are seeing asset managers as well, or investment managers as well, mushrooming. So it's a field that is catching on. I think the question is more on, are we reaching the right places with this information? And in terms of suitability, are we ensuring that what we're preaching and what we're offering is being offered to the right audience? I think for me, that's where the bulk of the concern is. Yes, we do need to do more, but we also need to be a little more concerted about it.
So I get the impression from that concern that currently there's incongruency, there's inconsistency between the two, the message and the audience.
Yes, so the message, the offering, and the audience. The reason why I'm saying that is personal finance, right? If you look at that phrase on its own, personal finance. So that alone tells you that what's right for me, Mr. Mogobe, is probably not right for you, or it's not a one size fits all type of thing. Now, when you look at what's available in the market, for instance, something that's suitable for me here living in Kgori is probably not suitable for my mother living in Tsabong. Something that's suitable for you here, Mr. Mogobe, is probably not suitable for the guy who helps you herd your cattle back home. But there definitely is a solution, and there definitely is a message for each and every one of us, right? And something that we need to start appreciating. And again, like I said, we'll talk about this in greater detail. But if you look at what people predominantly say about investing, right? This comes from, or I believe a big part of it comes from not having the right sort of product, or not being matched to the right sort of product for you, having that sort of blanket solution for everyone.
Okay, can you break down for us what Kgori Capital offers and what sort of products you would urge the average entrepreneur watching you to consider?
All right, thank you for that question. So, as Kgori Capital, like I said, we're a homegrown investment manager, and so what we do is we manage third-party assets. We manage our clients' assets in terms of financial assets. Now, we, just like most asset managers, our business started with pension funds. That's the sort of the backbone of most investment managers or most asset managers.
Because they sit on so much cash, truckloads of cash, isn't it?
Right. So yes, pension funds are where the world's assets are, basically. But as a business, you grow and you decide to be a little more inclusive, right? So to do more than just manage big funds. And so that's where now our unit trust offering came in. Unit trusts are really a pooled offering where instead of taking one client's assets, which are worth many, many millions, we're now taking many, many clients' assets, which on their own steads, maybe it's a little bit from Mr. Mogobe, it's a little bit from Tiro. But when you put that together, it's a big asset pool, which gives us bargaining power. Right.
Okay. All right. So those are the two you mentioned.
So that's basically, if I were to put it in aggregate, that's basically what we offer at Kgori Capital. We offer tailor-made investment solutions for our clientele.
Okay. What is an investment and how exactly does it differ from a savings account?
Right. Before I actually go into that, Mr. Mogobe, let me just put it out there that listen, there's no great debate between investing and saving, especially in Botswana. Whether you invest or you save, you're off to a good start. Okay? Our greatest battle here, which is still an uphill battle, is starting a savings journey or starting an investing journey. So as I discern between the two, I'm not saying invest, don't save, save, don't invest. All right?
Don't you need to save in order to invest?
Partly, yes. You would say that, yes. However, all I need to get across is that you need to start that journey. It's very, very important to start the journey. Now, the difference between investing and saving is when you're investing, you're taking on a certain amount of risk. And you're taking on a certain amount of risk for the potential of a higher return. So if you look at saving, when you put your money away into something that is a savings solution, you know what you're going to get out of it, right? So you're given...
Especially if it's a bank.
Exactly.
Maybe if it's a Motelo, it's a different proposition.
Right, but Motelo is not... That's not saving. Because I think Motelo has a very large... unaccounted for amount of risk. It's just that it's something that we're accustomed to doing, and so we sort of negate the risky part of it. But Motelo is definitely not a...
Not saving in the sense you're referring to.
It's not saving exactly in the sense that I'm referring to. If anything, we would pull it a little bit more towards the investing part of things. Yeah. And so that's why you see it doesn't fit the typical definition of what a savings is, because when you're saving, you know what you're putting in, you know what you're getting out.
Okay. You mentioned Motelo. We'll come back to saving in a moment. Can you just define for the viewer the risk that you see in Motelo that you say is undefined or unaccounted for?
Right. So a Motelo, for one, is largely unregulated. Right. Now, it being unregulated, that means if between you and I, Mr. Mogobe, we've got a Motelo, nothing stops me from running away ka madi arona. Yes, fine. There are legal means which you can rein me in and possibly get your payday sometime in the future. But the inconvenience and the time lapse between when I start to run away with your money and when you actually get it, if you do get it at some point in the future, right? That's what I'm talking about when I say that's largely unaccounted for. Now I'm not. I hope I'm not coming off as against Motelo, because I definitely am not.
It's a form of crowdfunding, isn't it?
Exactly, right? So when done right, Motelo is great. We see a lot of, at least we see a few Motelos that are doing very good things. Some of the buildings in CBD, for instance, were built by Motelo. We see Motelo now acquiring farms. We see Motelo now going into like the taxi and the public transport business. So when done right, Motelo is a great tool. But I don't want us to think about it as riskless just because it's something that we've adopted into our culture. There is an element of risk into going into Motelo, and that's what I want us to be conscious of, so that from
So
day
would you,
one,
as
you start to...
as Kgori or as Tiro Howard, advise somebody with excess liquidity to even consider Motelo?
Yes, consider it if it's right for you. But over and above all, make sure you cover your bases. Make sure you've got a legal contract in place. Make sure you've got something of a constitution, something that guides us to what happens when I default on my payments, what happens when I don't show up to meetings, what happens if one member passes, what happens to their assets in that particular instance, what happens when one member no longer wants to be a part of that Motelo. So that's all I'm trying to get across. That make sure you've covered
it has
your
to be
bases.
rule-based, and you'd advise, as I would as a lawyer, the members to ensure they get a legal document
Exactly.
which regulates their operations.
Yes.
Okay, we now go back to savings, and the question I have in my mind is that the interest rates environment is still horrific, and unless you can say that with the recent increases of interest rates, that has impacted savings in a positive way. But when I last checked, the rates were very horrific. So one wondered whether it was even worth it to put money in a savings account.
Right. That's a good question, and now that's where the personal finance aspect of things comes into play. If you're looking for a little more return than what you're being offered in a savings account, this is now the time to start considering different investments, and we'll dissect those just now. Savings offers you some level of assurance, which is what investor X out there is looking for. What they're looking for is to wake up tomorrow and say, I've got my money together and that's all I care about. They're not really interested in picking up a return, right? But when you start to look at the world of investing, this is now when you start to consider, is my money working as hard as I am? Is my money waking up every day to do a good job the same way I try every day to do a good job, right? So that's what the world of investing
You need to sweat your money.
Exactly, right? And so that's where now we start to unpack what sort of investments there are and who they're suitable for. Because even within the world of investing, we've got low-risk solutions for someone who doesn't have a very high-risk appetite or doesn't have a very high-risk capacity. And we've got high-risk solution for somebody who is looking for a potentially high return and has the capacity to absorb that risk into their portfolio.
Okay. Thank you for answering that question. You've answered it beautifully. Let's talk about the different types of investment vehicles available in Botswana. You touched on them, but let's just go through them one by one. I'll mention and then you will elaborate what it is, how it works. Okay. Equities.
Right. So equities literally means owning a part of something. So usually a part of a business. So there'll be a business, for instance, let's say Mogobe Nuggets of Wisdom now becomes Pty Ltd, and we decide that we want to grow this thing beyond Mogobe Plaza. We want this thing to be in Francistown, we want it to be in Tsabong, Lobatse, etc., and we need money to get there. So what we'll do is we'll make this company public. And what we mean by that is now we'll offer shares to people out there, to people living in Botswana, to people living beyond the borders of Botswana, to be able to come in and buy a stake of Mogobe nuggets of wisdom. So that's what's meant by equity. Equities tend to be on the higher risk side of things because you'll appreciate the value of a company can go up or down daily, right? Depending on numerous factors, depending on demand and supply, depending on the fundamentals, depending on what sort of news is available about that company.
The Warren Buffett school of thought says, I'm not buying shares, I'm not buying pieces of fluctuating, unpredictable shares. I'm buying a piece of the company. It took me a long time to understand what he meant. He said, when you buy, look at the company and ignore the gyrations of the market. What is your view on that?
Well, 100% right? But there is the off chance that that company sinks to be worth nothing, right? So, in a share that is worth 1 pula now, for instance, you can buy it now and hold it for 20 years. And in 20 years' time, it's now worth nothing, which means you've lost 100% of the value of your investment. Which is now where we start to talk about diversification. Buy more than one company, right? It's entirely possible within equities to lose the entirety of your value. But when your equity, when it's one company among a myriad of companies that you bought into, then we suppose that the aggregate of that will have some great value in the future, and that's where pooled investments start to come in.
I hear you, but in Botswana, can you do what is possible in America, buy, an index fund that covers a mutual fund that's based on the SP 500, for argument's sake, or whatever, is it possible to do that in Botswana? And if so, how?
You can buy into unit trusts.
Okay.
So unit trusts are pooled solutions. So now with the unit trust, what happens is we take my money, we take Mr. Mogobe's money, we put it all together. Then as investment managers, we now start to pick the underlying securities. We pick the shares ourselves. Now, the great benefit for you as an investor is that, I'll give an example with myself, right? Maybe I'm not an investment manager. Maybe what I am is a teacher. Or maybe what I am is a lawyer. My job is not to wake up every day and analyze company shares and company balance sheets.
Pick and choose what to buy and sell.
Right? That's not my job. My job is to teach, or is to represent people in court. When I buy into a unit trust, I'm automatically buying the expertise behind a unit trust. I'm buying into the portfolio managers and the investment analysts that are at Kgori Capital. And they're doing my job for me. They're growing my investment for me.
For a fee.
For a fee, obviously. Another thing that's great about unit trusts is because they're a pooled solution. You'll find that, for instance, with an equity-based unit trust, which is a unit trust where it's just shares in it, there's more than one share in there. When you buy into that unit trust, you're effectively buying into, say, 20 to 70 stocks that are within that portfolio. So you've already bought into diversification as well. Right.
And still on the question of equities, as it relates to unit trusts, how do you pick and which ones does Kgori Capital feel bullish about at the moment?
Okay, so that's not really a question for me to answer because I'm not a portfolio manager. However, our investment philosophy as an asset manager is we buy into quality. So we ignore, or we don't take too much into account what is happening now, right? We look at the business that we're investing in. Does it have good corporate governance structures? Does it have a solid business model? Does it have a good balance sheet? Does it have a strong track record of outperforming their competitors, for instance, or staying competitive in the market? And and that's what we consider quality, right? And once we're sold on the quality, then we have some level of conviction on that company. And that's what will inform whether we put that stock into a portfolio or not. So you'll appreciate in the very short term, a lot can happen for a company. They can, for instance, fire their managing director. They can, for instance, decide on a new governance strategy. They can move their offices. All of these things can have some level of impact on what the stock price is. But when you buy into quality, and especially buying into quality and buying underpriced, then eventually what happens is the stock price is going to reflect the underlying fundamentals of this business at some point in the future. And at that point, we have cashed into the capital gain on that equity.
I understand. Do you like Warren Buffett? And I keep referring to him because Equities is the master.
Right.
Do you, for instance, look for companies when you decide what to buy with a moat, like he says, he calls it a comparative advantage, or something like that? Do you look at that, the competitive advantage, do you get the moat aspect?
Well, yes, you'll appreciate that competitive advantage is what draws you from where you are now to some point in the future as a company, right? Otherwise, what happens is you sort of go into oblivion. So a company needs to have some sort of...
He calls it durable competitive advantage. I needed to get those words right.
Yes. So you do need to have some competitive advantage as a company, and that's part of what we consider as quality in a business.
All right. Let's talk about another class, bonds.
Right.
I don't think the average business person in Botswana ever considers buying bonds, unless I'm mistaken.
Okay. So what bonds is... Now, let's go back to the Mogobe nuggets of wisdom example. Now, instead of making shares available, because I don't want to share my company with anyone, I want it to be my company. Mogobe nuggets of wisdom is Tiro's company 100%, and I don't want to dilute that. Instead, what I'll do is I'll issue a debt instrument. I'll ask for a loan, basically, from the public. I'll say, listen, I want to do XYZ, and to achieve XYZ, I need 10 million. And so that's what's meant by issuing a bond, right? So now the public can go into this, either one person buys the whole bond, or you have a lot of people putting in their little bits and eventually raising that 10 million Pula bond. What that means is I have, let's say for instance, 100 people that I collectively owe 10 million Pula at some point in the future. Between now and that point in the future, what I owe them is interest payments. So they're referred to usually as coupon payments. So year one, I'm going to pay you 8%, for instance. Year two, I'll pay you another 8%. And if that's a 5-year bond, as an example, at the end of year 5, I'm going to pay you the interest for year 5, and then I'm going to give you back your 10 million. So your 10 million as an investor, or your portion of the 10 million, say for instance, you put 100,000 Pula in. What it's doing is over the 5-year period, it's earning you an interest.
And the amount doesn't fluctuate, the amount of interest.
Typically the amount doesn't fluctuate, but you've got different types of bonds. You have fixed rate bonds, you've got fluctuating rate bonds. So with a fixed rate bond, you agree on a price now, or you agree on an interest rate now, and that will be the prevailing interest rate through the term of this bond.
Is it something, as I said, as I implied earlier, that the average entrepreneur ever looks into?
Not precisely, especially not here, I don't think. Usually, what we get here is institutional buyers buying bonds. So you'll have other companies, other corporations buying into that bond.
So is there a sense in which we are missing out as entrepreneurs, as business people?
Yes. So just on the previous question, I was just going to go back again into unit trusts, right? That as an individual, as the small man like Tiro, I have a way of buying into a bond by buying into a unit trust that's got a composite of bonds. So it'll have maybe more than one bond. So I've bought a small portion of bond X, a small portion of bond Y, a small portion of bond Z. So that's how we normally see individuals like myself and yourself buying into bonds. Right.
All right. Now let's talk property commodities. Are you talking about property assets, or property commodities is a particular phraseology to have a special meaning?
Right. So property and commodities are two different asset classes.
Okay, all right.
Now,
okay.
within property, and I like that you asked that question, you can buy into a property. For instance, like we mentioned, Mogobe Plaza, which is a great property in the middle of the CBD, right? So you can buy the whole building because you can afford it. But when you can't afford it, when you can't afford to build a multi-res, when you can't afford to build a house somewhere in phase 2, what you can do is buy into property companies or buy into unit trusts that are property based, right? So that's now where where you're buying into a financial asset of which the composite is property, right? So property in that sense is can be a financial investment. This was what I was going to say.
Okay. And then now commodities. Let's talk about commodities.
So commodities is very simple, and the great thing about commodities is as Botswana, it's something that we really like. So when you're talking about goats, you're talking about cattle, you're talking about commodities. Academically speaking, we like to consider things like gold, things like oil. That's what we normally would refer to as commodities. But if you look at the Botswana example, like I said, you've got things like cattle, you've got things like goats. So that's what commodities are.
And how well is the property is cattle in Botswana doing as a commodity? For instance, if somebody comes to you wanting for you to help them allocate their portfolio or to set it up, would you advise them to have a portion in cattle as a commodity investment?
Right, so that's a very broad question. And the reason why I say that is we have different types of investments that are suitable to each and every one of us. And that suitability will come from, first of all, interest. Are you interested in it? It will come from capacity. Do you have the capacity to buy and own cattle and manage a farm? It will come from expertise. Do you know anything about cattle? Have you learned anything about the rearing of cattle? So it's not just about cattle. When you're considering any investment, it's very important to consider those things, and time as well. So when you consider those 4 factors, do you have an interest in it? Do you have the expertise to manage cattle? Do you have the expertise, even if it's a financial investment, like we gave the earlier example of equities, do you have the expertise to analyze shares, right, for yourself? Do you have an interest in shares? Do you have the time to go to Central Securities Depository? Do you have the time to come to Kgori Capital and fill in the application forms, for instance? So that's what I mean. So the same will apply to cattle. Do you have time? Do you have interest? Do you have the expertise? Do you have the capacity? So if someone were to ask me that question, I would look at it from those angles. And
So
the answer for those four.
There's no one size fits all.
There's
obviously.
really no one size
It leads to
fits
my
all.
next question to say, what kind of investments are suitable for what kind of client? What type of client? Because it seems to me, by implication, we are saying that there are certain clients for certain investments.
Pretty much, yes. So let's give a few examples. If you're like Tiro and you don't have a lot of time on your hands because you've got a job, like I've got a job to do at Kgori Capital, which takes up the bulk of my time. When I'm not at that job, it's family time. When it's not family time, it's recreational time, maybe church, maybe sport, etc. Right? So if you don't have the time on your hands to go into what we'd call an active investment, then what you should be considering is a passive investment, right? Such as a lot of financial instruments, like unit trusts. A lot of us don't have the time. We would like to, but we don't have the time. If you do absolutely have the time, you've got the expertise, that absolutely go into an active investment. So if you see what's happened there is now at a very broad level, you can aggregate every investment into whether it's either an active investment or a passive investment. And an active investment simply means that now you get your hands dirty, right? You are involved in the day-to-day running of this investment. For example, a farm, right? You can't, I think it's something that we say quite a lot, that you can't run a farm remote control, right? So if you have the capacity in you to get your hands dirty, you've got the time, then absolutely go into an active investment, right? If you don't, if you're like Tiro and you don't, go into a passive investment. A passive investment, the beauty about it for people who don't have the time is it typically on a day-to-day will not require anything from you, or at least it won't require a lot from you. There'll be experts behind the scenes who are the ones who are running things on a daily basis, and all you do is take put your capital or put your cash into it.
Okay.
Yeah.
All right. You guys have studied this thing extensively. Let's talk about the Botswana market, looking at all these classes. Let's just pick a number and say the last 20 years. Which of these investment classes have outperformed the rest or have performed better than the rest if we compare them side by side in Botswana over the last 2 decades or so?
Okay. Equities tends to outperform every other asset class, right? So not just the Botswana example, just on a global basis. So if you look for instance at the S&P 500, right? It's basically the 500 most valuable companies in the United States of A, isn't it? So if you look at how that has done over the past 20 years, you'll have your jaw to the floor. So equities, just on a broad level, tends to outperform every other asset class.
Okay.
With the Botswana example, I think you'd also have property as a very maybe close second. I'm not a property expert. I can't say why. Right. All I am is
You're an observer.
I'm a fund manager. Yes.
Okay, so those are the two champions, isn't it? Then equities and property.
Basically, yes.
So
but
that-
equities definitely on a long term tends to outperform all other asset classes.
Okay.
Yeah.
So which means bonds and commodities, we can frown upon them a little bit.
No, not really. I wouldn't frown upon them because you see, like we've been saying throughout the entirety of this show. I, for instance, maybe don't have the risk appetite for the volatility that equities will offer, right? So you'll find people buying into shares, And then 2 years later, they're like, hi, man, I have not had a single night of sleep since I bought these shares. Because you can wake up every day and it's at a different price level. Now, that's the sort of person who should be looking at things like bonds, right? Or this sort
So
of...
you get certainty and stability, but you don't get phenomenal growth.
Something like that, yes. So like we said, the different asset classes are suitable for different types of people. And for other types of people as well, what you should be looking at is a pooled solution, which most times will be more than one equity or more than one asset class. So for instance, one pooled solution can have in it property stocks, can have commodities or commodity trackers, it can have bonds, it can have other what we call money market instruments like fixed deposits and call accounts, etc. Yeah.
Well, let's talk about how one discerns, makes a distinction through discernment between financial investment, a genuine one, and a scam or a Ponzi scheme. How do you tell these two apart?
Thank you for asking that. That's a very important question, Mr. Mogobe. It's sort of an uphill battle because at the same time that we're fighting for people to put a little aside for the future, right? That's what we said at the very beginning of the show. We have other people that are, preying onto people's earnest desires to put a little aside for themselves and for their children.
Sometimes greed.
Exactly.
Sometimes they exploit greed, pure greed.
Yeah, and it is a shame, but there are ways that you can avoid being prey to scammers. One of the things, which is one of the overarching things, is if it's too good to be true, right? And that for me is the most important thing. If it sounds too good to be true, then it probably is. 99%, it probably is too good to be true. It probably is a scam. So that's number one. Number two, look at regulatory bodies. When you're investing, and I'll speak for financial investments, there is there should be a regulatory body. That person should be registered with a regulatory body, right? So the non-bank financial institutions regulatory authority, for instance, regulates anything that's a financial investment that's not related to a bank. The Bank of Botswana regulates anything that is to do with a bank, right? So you've got two regulators there that someone needs to ascribe to, and if they're not, then that person is probably a scammer, or at the very least stay away from them, because
But when you say that, we shouldn't forget that Benny Madoff was a highly respected man, but he scammed the world, or he scammed very successful people of 75 billion or thereabouts.
Right.
And yet he was respected. At some point, he was a chairman of the Johannesburg Stock Exchange. I mean to say New York Stock Exchange.
Right.
So what does that tell you?
So what we're talking about now isn't foolproof, right? But it should be able to sieve out the bulk of the investors. There are scammers that are sort of a little ahead of the competition, right? A little ahead, maybe even of regulation. Regulation does eventually catch up, like it did with Bernie Madoff, right? However, if you look at, for those two things in particular, too good to be true, are they regulated? That should help you sieve out the bulk of the scammers. Another thing that you want to look at is time-limited schemes. When someone tells you, get into this investment, it's now or never, stay away from that investment. Not because it's particularly a scam, but there's a high chance it could be. But also when you're putting your money into an investment, remember you're putting in money that you've worked blood, sweat, and tears for. You deserve to at least dig into that investment and find out about it, and all of that, get a second opinion, all of that requires time. But when you're on a time-limited offer, you tend not to do your due diligence.
Still on that point, Mr. Howard, does it ever happen that an investment is too good to be true, and then you as an investment managers realize after some years that, oops, we thought it was a scam, it's not? Has the reverse ever happened?
The reverse can happen, yes.
No, I'm asking if it has happened. That you are
Has
aware
happened. I can't think of any example out of the top of my head, but it can happen. But the reason why that's not a train smash is, listen, as investment managers, we're protecting so many investors' money. And if it means missing off on the off chance that something that looks too good to be true actually isn't and is a genuine investment, then that's fine. We need to protect, because remember, when you're protecting so many people's money, you're also protecting their futures. You're protecting the future of their loved ones. So it's a very big burden. And so if it means missing out on some of the world's most awesome opportunities, then unfortunately so be it. Right.
All right, it's a very interesting answer that you've come up with, and I can relate to that. But let's look at somebody like me who is a victim of scammers online, claiming to be me, selling Forex, for instance, and crypto. I've repeatedly said I'm not into those things, but every now and then I think it used to happen at the rate of every other day. Somebody calls or comes here that I've either been scammed or I nearly was scammed by somebody claiming to be you in this area of Forex. Let's talk about Forex as a category. Is it ever genuine? Number one. Number two, how do we address the situations that I just explained?
Okay. Number one, is it ever genuine? Yes, it is genuine. I'll give you one example. When I cross over to some of our neighboring countries, I'll usually go to a bank, right? If I'm crossing to South Africa, for instance, and I'm going to get an exchange on the Pula to Rand, that on its own, that's a Forex transaction, isn't it? So there's a genuine Forex transaction for you.
Yes.
On the other hand, as well, there are people who genuinely make a living from trading Forex, right? Whether that's right for you and I, Mr. Mogobe, is a different subject altogether. But there is.
Because some banks have divisions that do Forex full time.
Exactly. So Forex is genuine. Unfortunately, there's a lot of people who claim to be doing Forex, but what they actually are is scammers. And again, if you go back to what we're talking about, if someone comes to you as someone who's doing Forex and they claim something, usually the claims will be, you can't even believe it, right? So don't believe it. It's as simple as that. Just don't believe it. Walk away with your money and walk away with your integrity intact. For someone like you, Mr. Mogobe, unfortunately, when you've done well for yourself, your name tends to attract scammers, if we're to call it that. It's not just you, right? It's the world over. It's a couple of other people, even within Botswana, that I follow, that I like, that are very inspirational. All you can do is to keep reporting each person as they come, to either Mbifira or to your nearest police station.
I haven't done Mbifira, but I've reported to the social media authorities and to the police repeatedly. It just continues unabated.
You just have to lend us a great favor and keep doing that, Mr. Mogobe.
And having said that, let's talk about crypto. Crypto was a rave at the beginning of last year. Today, nobody wants to hear the word.
Right.
What is the attitude of yourself and Kgori capital towards that? Does it fall in the category of scams and Ponzi schemes?
Crypto is, to my understanding, not a Ponzi scheme and not a scam. Again, like I said, there are people who prey on innocent souls and do scam people with the claim of doing crypto. Now, that said, talking about our attitude towards cryptos as a company or as an investment manager, I'm going to compare it with two things. Let's compare it with equities and let's compare it with property. Equity is a share in a business, right? And part of the value of that equity is going to be driven by the demand and supply for that particular stock. So for stocks which have very strong demand, their price is going to be ultimately, or there's a potential for that price to be very high. However, if you take demand and supply out of the equation, the value from that stock is derived from the value of the actual business. So Mogobe Nuggets of Wisdom Pty Ltd, the value of that business is what you and I are doing here today. Do people see value in it? Are people subscribing to the YouTube channels? Are we earning a revenue from the YouTube channel? For instance, are we earning a revenue from, I don't know, people buying our cassettes? If we're selling cassettes, right? So that's the value of a business. The value of a FMCG business or a supermarket is people walking in and out of the
So there is intrinsic value.
Exactly. So there's some level of intrinsic value, right? If you look at property, the demand and supply for a particular type of property will drive the price up or down. But if there is no demand or supply for that particular property, that property won't be worth zero. You can't come in and just say, I own it, I didn't have to buy it, and that's it. No. Now the value of that property will come from the intrinsic value. What is the value of the brick and mortar that went into this? The aluminum windows, the ceiling and all of that. At bare minimum, what's the value of that? Right. So that's what we mean when we say the intrinsic value of a property. What value can I derive from that property? Can I live in that property and have my children in that property? So that's what we mean by the intrinsic value of a property. When you talk cryptocurrencies, this is something that's driven purely by the demand and supply. So the reason why the price or the I don't want to call it the value.
With regard to Bitcoin, it's lost what, 40%, 60%?
The reason why something like that will happen is, for instance, maybe there'll be a news event. Now that news event happens such that now people are not so interested in buying crypto. So you've taken the demand out of the equation. And the value of that crypto or the price of that cryptocurrency drops drastically, right? So cryptocurrency, at least to the best of my knowledge, does not have a known intrinsic value.
Well, those who are pro it say that it competes very favorably against what they call fiat currency, which when they say fiat, they mean it's controlled by decree from the central banks.
Right. So now you see, when we get to a level where the world is using cryptocurrencies, right? So by the world, I'm talking about the world we live in. When we get to a point where in Botswana we can buy goods with cryptocurrency, and it's widely accepted, so maybe not just in Botswana, even outside of Botswana. You know, now when you have what you call a fiat currency, Mr. Mogobe, you can walk into any store and buy anything that you want, right? With a cryptocurrency, maybe not so much. You would only be able to buy from a store which believes in cryptocurrency, maybe like you do. And so they have said, they've opened their doors for cryptocurrency owners to walk into their stores and purchase a service or a good, right? So when we get to that level, perhaps cryptocurrencies will have an intrinsic value. So at the moment, I don't think we are at that point, but maybe at some level in the future we will, or maybe at some level in the future we won't. Now, when it comes to, which is just how I want to conclude this, is when it comes to should I put my money into cryptocurrency, which I know is a very popular question. Because
I'm sure you're getting a lot of pressure.
Yes, because cryptocurrencies, at least at the very moment, do not have a known intrinsic value. What you're doing when you put your money into a cryptocurrency is you're speculating. You're speculating on the price of that cryptocurrency. So it's a paradigm on its own, which we call speculating. So don't speculate with the very last money that you have. Speculate with a small portion of your wealth.
If you're going to do that at all.
Exactly. If you're going to do that, actually, that's a very important point. Thank you for. If you're going to do it at all, speculate with a very small portion of your wealth that if you lose tomorrow, you'll still get a good night's sleep.
Let me ask you about this situation. I come to an investment advisor and they advise me, allocate, send your money here, do this, do this, do this. And I follow his advice to the letter. And it proves disastrous. And I feel hard done by that investment manager. I feel very aggrieved. What is my recourse? Where can I seek assistance?
Okay. So just first things first, as investment managers, we don't offer financial advice, right? So that's why we work with a network of financial advisors, so that if you need financial advice, Mr. Mogobe, I can refer you to a financial advisor who maybe works with us, right? The second point is, when you're looking at financial advisors or investment advisors, right, do your homework. Pick a financial advisor or an investment advisor who is qualified. Unfortunately, financial advisor at the moment, especially in Botswana, is I can wake up tomorrow, Mr. Mogobe, and decide that I'm a financial advisor.
It's unregulated?
It's not unregulated, right? Because NBFIRA does have minimum requirements for you to become a financial advisor, and one of them is that you should be licensed, right? However, unfortunately, anyone out there can call themselves a financial advisor. Now, are you going to take financial advice from somebody who's not a financial expert, from somebody who doesn't have any experience, and somebody who doesn't have any educational background in financial advice? So that's the one thing. Look at someone who's qualified and experienced, and ensure that it's somebody that's regulated with NBFIRA. So that was going to be my second point, that look at somebody who's regulated with NBFIRA, because NBFIRA does, at the very least, have minimum requirements for you to become a financial advisor, for you to become an investment advisor. Unfortunately, a lot of the time what we run into is financial salespeople or product salesmen, right? So that's where now, you don't know whether your hands are in the, your future is in the hands of someone who actually knows what they're talking about, or is just trying to shove a product down your throat.
And what is your recourse?
Your recourse is,
if you are aggrieved and you're not happy with the advice.
Yeah. So.
And you have invested, and there are consequences. You've lost money.
So there are two aspects to that question, which is why maybe I took a little pause, right? If you do it the right way with a registered financial advisor, and they gave you financial advice, and maybe it just doesn't pay off, or it doesn't pay off when you need it to, then what you have done there is you've taken a risk with a financial advisor, and it just didn't pay off, Mr. Mogobe, right? So they've told you maybe to invest in equities, and you put all of your money into equities, or maybe you put all of your money into a single stock, and it went poof.
You went belly up.
Yeah. All you're doing by putting your money through someone who is educated and qualified and registered with NBFIRA is you are lessening the chance that something like that, an event like that happens. A proper financial advisor who's regulated has a lot to lose because that's their bread and butter, right? So that being their bread and butter, they do research, they find out about your personal situation, and they give you appropriate advice. But if, on the other hand, you meet someone who is not regulated, who is not qualified, who doesn't have experience in anything financial, they're going to push a product down your throat. It might not work for you, and what's happened there is you've been conned out of your money by a product salesperson.
Yeah. All right. Now I want us to project into the future, sir, as we come towards the end of our conversation. What is the crystal ball telling us about Mr. Tiro Howard 10, 15 years down the line as a brand and even as part of Kgori Capital? What do you see coming?
Okay. So part of and I think you're asking me about my vision,
yes.
Right? Right. So a big part of my vision for myself, and even if you follow me on, say, LinkedIn, is I want to get every Motswana invested. Right? It maybe won't happen in my lifetime. I hope it does.
Invested generally.
Invested generally. Listen, Mr. Mogobe, investing isn't what we used to think it was. We used to think back in the day that it was a luxury. It's for rich people. It's for people who know a lot. It's for people who think too highly of themselves. Investing is not a luxury. Investing is a necessity for everyone. And the reason for that is, one, you are definitely going to need a little help in the future, right? A little help getting your roof fixed, a little help taking your kids to school, a little help having a comfortable retirement, etc. That help you can only get from your present self. The help or the assistance that your future self is going to need will come mostly from your present self. And that's where investing comes in. It's in realizing that what I have now, I might not always have. What I have now, I will definitely need a little assistance from this in the future. Let me put away a little bit of what I have now for my future self, so that my future self looks back 20 years, 30 years from now and says, do you know what, Mr. Tiro from 30 years ago? Thank you so much. So that's why I say I want to get every Motswana invested, because I've realized that this is not something that is a luxury, right?
How do you accomplish that, Mr. Howard? How do you accomplish that laudable objective?
So if you look at, for instance, what we do as a company at Kgori Capital, financial literacy is a big part of how we give back to the community that we live in, that we operate in. We want to make sure through our YouTube channel, through the articles and the news pieces that we put out in newspapers, through radio, through all means possible.
Through the nuggets.
Through Mogobe nuggets, what we're doing now, that we get Botswana to understand and appreciate what investments are and what the importance of investing is. So a big part of how we get from where we are now to having every Motswana invested, a lot of that is going to rest on the shoulders of education, financial education. And that's why it's such a big deal for us at Kgori Capital.
So do you go to schools as well? Do you have seminars and things like that?
Yes, schools maybe not so much. And I'm saying not so much because it's a big part of our plan for the future, right? Is to go into schools and do a lot of financial education within schools. We go into corporates and we do this. We go on to mass media and we do this. And the reason why, for instance, mass media is preferred is we can reach a lot of people at the same time. However, as a company, like I said, this is something that we are very passionate about, and if there is a school out there that wants to welcome and open their doors to us, we'd be very happy to come in. It's a very big plan, like I said, for our future as a company, is we need to go into schools and we need to do this for the young generation, for the young minds.
Speaking of young minds, is there a standard, if you like, a rule of thumb that applies to how if the present self should distribute their salary? Let's say somebody's salary is 10,000. For you to be financially successful in the future, is there a formula for how you should distribute the salary in terms of between luxuries, between investments, between necessities, and that kind of thing?
Right. So we normally say, or at least the academic way of thinking about it is, put half your age in percentage into a savings and an investment plan. So say, for instance, I'm 30 years old as we speak. At the bare minimum, I need to be investing 15% of my income into a pot for my future self. So that's what we consider should be the bare minimum, right? You can get to, and I have met people who
So you convert half your age to a percentage.
You convert half
so
your age
somebody
into
who's
a
60
percentage.
should set aside 30%.
Exactly.
And so on and so forth.
And so on. And so someone who's starting off at work at maybe 22 or 23 needs to save 11% or 11.5%. So that's half their age in percentage. And like I said, that's the bare minimum. I have met people who save half of their income. They seem to be the most stress-free people I've ever met, that I've ever met. So the more you can do, definitely the better for yourself.
Okay, so is there some thinking behind that? Why half the age? Is there some kind of logic?
Right. So the logic is, if you look at it, let's compare a 20-year-old to a 40-year-old, right? I think that's the easiest example. A 20-year-old saving 10% has 40 years until retirement. So 10% of their income for 40 years definitely gets them somewhere, right? Gets them closer to having a good life and a good retirement. Someone who's 40 years only has 20 years till retirement. And that's why someone who's 40 years now saves and invests half, which is 20%.
Okay.
So 20% is a little steeper, but that's because you only have 20 years. Someone who's 50 years, on the other hand, has only maybe 10 years. And the reason why I keep mentioning retirement is not the ultimate goal, right? But it is the horizon of your productive self. Right, so your productive self will only remain productive for, usually we say, until 60 or until 65. You might be lucky and be able to be productive until you are 80, right? But that's, like I said, that's just luck. You're just lucky you're just blessed to be having that productivity into even after you're 60.
All right. Thank you very much. Now, time for you to ask me a question, sir.
All right. I think, having watched Mogobe Nuggets of Wisdom, and I do watch it quite a lot, I want to know what your inspiration is for doing because you're an inspiration to many. I'd like to believe each and every one who presses that subscribe button is because they're inspired in some way or the other. So what's your inspiration for doing what we're doing here?
Exactly the reason you gave, which is to enthuse, energize, and motivate people such as yourself, people who are entrepreneurially inclined, people who are interested in making an impact in their lives. What I have noticed for the longest time, I was watching YouTube clips and videos from overseas, and I noticed that there was a huge gaping gap when it comes to Botswana and even Southern Africa, insofar as content that is geared, directed towards entrepreneurs, content that is actionable, content that is empowering.
So, like I normally do when a new idea comes, I experimented. Basically, I started with my son grabbing a small camera which we bought from Game City, and then I started shooting. And now I got a lot of positive responses. I got a lot of curiosity, and then when I took that, initially it was just me with one small camera, and then about 4 months later, I then changed it to me now interviewing people. This was the beginning of 2020. So of course the pandemic disrupted a bit, but we carried on. So the inspiration is to enthuse, empower, just as our tagline says, enthuse, energize, inspire, and empower entrepreneurs. And I think by so doing, I also learn. For instance, I learned so much from just sharing with you this afternoon. So it's an opportunity to absorb wisdom for myself and to know what's happening out there in the marketplace. When I started the show, I was buying into this despondency, Botswana, within 5 minutes of sitting down with them, they tell you how terrible everything is, even in the entrepreneurial space. What I've discovered, the reality is totally different. People are making a difference. People are even benefiting from the COVID situation. People call it here, typically in the Nagas, they call it the COVID dividend. So the reality is that people are going places and we're on an upward trajectory, and it makes me very, very happy to be part of that effort, as opposed to what would have happened if I didn't have a show like this. We have an average of 4 to 4 entrepreneurs a day, every Thursday at least, share with me the best, the best, and I share with the best and the brightest. They share their deepest secrets. So that is the reason. I don't know if I've answered your question.
No, 100%, yeah.
Okay, all right. Mr. Howard, you see that camera?
Right.
Yes, please talk to that viewer and leave them with a concluding message, something empowering and encouraging.
Right. So like I said, and like we've talked about during the entirety of this show, it's very important to start your investment journey. Don't think too much about starting with 1 million pula or starting with 10 million pula. As long as you start investing, you are increasing significantly your chances of reaching your goals. Investing is no longer a luxury. It's no longer for a certain category of people. There are investments for everyone across the board, because everyone across the board does need to have an investment journey and does need to start their investment journey. Contact us at Kgori Capital at 399-2400, and we'd be happy to start your investment journey with you.
Are you accessible on social media? And if so, where?
Right. So we've got a very active YouTube channel with a lot of informative videos. We've got a very active, if not one of the most active, LinkedIn pages with a lot of information about investments, with a lot of information about what's happening in the market. And we do try and ensure that the information that we have on our social media pages, anybody can understand. And we're always happy to answer any of your questions on any of our social media channels, or if you contact us at the number that I gave before. We also have a very lovely website, www.kgoricapital.com, or you can just simply search on Google Kgori Capital, and it should be the first result that comes up. Check our website. It's also very informative. We talk a lot about what investments are. We talk a lot about unit trust. We talk a lot about how to start your investment journey on our website.
Thank you very much, Mr. Howard. You've been a wonderful guest. I'm going to invite you again in future to talk about things like retirement, to talk about other products, and to have deeper insights into what we've shared. So promise me in advance that when I invite you, maybe 6 months hence or a year hence, you will come.
No, lovely. Absolutely, I will come. There is a lot that we haven't talked about today that we still need to cover ground on. So I'd be happy.
Thank you very much. You
Cheers.
did a good job. You did a good job.
Thanks, Mogobe.